So thank you for the invitation. So this presentation is about the development of REIT markets in Greater China. So I will talk about the legislative overview, the market development and performance and opportunities and obstacles of C-REITs. So basically, every year we heard about the news that C-REIT is coming, or the first C-REIT is about to launching. So here are some examples of the news. For example, 2015, the Wall Street Journal that says China's first REIT to list in Shenzhen. 2018, so China likely to see first REIT this year. 2021, so China nears approval of its first public REIT to ease debt. So it seems that the first C-REIT is coming every year. So the reality is C-REIT has not been launched yet. None of this C-REIT is real REIT. They are different from the classical REIT in mature REIT market. So however, China is gradually getting closer to launch its first publicly traded REIT. So instead, REITs have been implemented in Hong Kong and Taiwan since 2005. The first Hong Kong REIT is Link REIT. It is also the largest REIT in Hong Kong and even Asia. In 2018, according to S&P Market Intelligence database, there were 10 REITs listed in Hong Kong Stock Exchange. 4 are dominated by RMB and 6 are non-RMB REIT. The total market size was around $30 billion. So the first Taiwan REIT is Fubon #1 REIT. In 2018, according to S&P Market Intelligence database, there were 3 Taiwanese REITs with the market size of $1.4 billion. So in the mainland China until now, there has been no legal framework for REITs. The first attempt to implement a Chinese REIT regime was in 2004. The China Banking Regulatory Commission issued a consultation draft governing companies that engage in REITs, but the program was abandoned in 2007. In 2008, the Chinese government reconsidered introducing REITs, and a number of listed companies submitted their applications for approval. The first quasi-C-REIT is Penghua Qianhai Wanke Real Estate Investment Trust. This REIT was designed to securitize a single mixed-use development in Shenzhen, but actually it does not give any ownership of the underlying assets to its shareholders. So upon its termination in 2025, its asset will be transferred free of charge from China Wanke to Shenzhen government. So we say this is a quasi-REIT because it bears a number of special characteristics that distinguish it from REITs in mature REIT markets. In 2020, the first REIT guideline, Circular 40, was issued. This is another step closer to launching the C-REIT, but the pilot program explicitly excludes residential and commercial real estate properties and is instead starting with infrastructure. So we will look into more details of Circular 40 in a minute. And apart from that, there are also 36 offshore listed real estate companies holding properties in mainland China. So in 2018, the market size was over $200 billion. So this is a brief history of REITs in Greater China. Now let's take a look at the structure. So Hong Kong and Taiwan REITs have very similar structures and features as classical REITs. For instance, so REIT can acquire and hold property in 2 ways, by direct ownership or through special purpose vehicles. This for Taiwan, very similar structure. However, if we take a look at the structure of the C-REIT, according to Circular 40, so the structure is much more complicated. So it is like the infrastructure funds plus asset-backed securities. So REIT investors will publicly subscribe to units offered as closed-end infrastructure fund. However, the problem is the public funds can only invest in tradable securities such as stocks, bonds, and other permitted financial instruments rather than directly holding underlying assets. So therefore, Chinese REITs have to be structured in a way to address the restrictions under the existing regime. Yeah, so therefore, another layer, the asset-backed securities, has to be added. So the infrastructure fund will subscribe to asset-backed securities. That is, the ABS will act as a conduit for passing through the cash flow from the underlying asset to the fund. In practical, one more layer, a private equity fund, will also be added between the asset-backed security and the project company. So the originator, they need to hold at least 20% of the stake in the infrastructure fund for at least 5 years. So this is for interest alignment. So in addition, the originator may also receive the management fees if they do project management. So unit holders, they will receive the cash flows from the underlying properties. However, so we can see because of the complicated structure, service fees will be paid to different managers. For example, the public fund managers or the asset-backed security product managers or the PE fund managers. So this can result in a cash leakage, making it harder for the underlying asset to meet the yield requirement. So in addition to the different structures, C-REIT under Circular 40 also differ from the Hong Kong and Taiwan REITs in other aspects. So Hong Kong and Taiwan REITs typically structure and feature have a very typical structure and features as a REIT in mature market. For example, a majority of the investment should be real estate investment. At least 90% of the annual net income will be distributed to the shareholders, and they are exempt from the corporate tax corporate income tax. So, however, C-REITs first, currently, the property type is restricted to infrastructure, such as transportation, environmental protection, urban utilities, and new infrastructure. Commercial and residential real estate are excluded from C-REIT property holding. And the C-REIT also have to manage their financial leverage at low levels. The total asset of the infrastructure fund cannot exceed 140% of net asset. This implies that the gearing gap will below 30%. So such a gearing gap is among the most stringent in the global REIT market. And C-REIT are expected to pay high yield. The effective minimum yield is 4%. But on the other hand, the tax benefits is not clear. So C-REIT do not enjoy the tax benefits under Circular 40. The lack of tax breaks may reduce the appeal of China's REITs. In most markets, we know that the tax benefits are probably the most important motivation for launching and investing REITs. However, this is not clear for C-REIT. So now let's take a look at the REIT market development in Greater China. According to S&P Market Intelligence database, there are 5 RMB-dominated REITs, which focus on the property market in the mainland China. 4 are listed in Hong Kong Stock Exchange, 1 is listed in Singapore Stock Exchange. The total market capitalization is around $9.9 billion by the end of 2018. Around 50% of the total market capitalization is contributed by diversified REITs, followed by retail and hotel REITs. So each REIT manages around 7 properties, which is much less than most US REITs hold. The non-RMB REITs include Hong Kong REIT and Taiwan REITs. By the end of 2018, the total market capitalization was around 26 billion US dollars. Hong Kong REIT have spanned many real estate asset classes, including retail, office, hotel, lodging. The retail REIT had the largest market share, around 70% of total market capitalization, followed by office and diversified REITs. Link REIT is the largest REIT in Hong Kong and also in Asia. Its portfolio includes 131 properties with an internal floor area over 11 million square feet of retail space. Regarding Taiwan REITs, all of them are diversified REITs. Yeah, but they are still relatively small with 3 to 6 properties. So this table shows the performance of the REITs in Greater China. I use FTSE Nareit index. The first column is the offshore Chinese real estate, listed real estate firms, although in FTSE Nareit index they call C-REIT, but actually they are just real estate operating companies, so I call them as the offshore C-REIT. And this is then, and the next column is Hong Kong REIT, and next column is Taiwan REIT, and I also compare the performance with the European and US REITs. First, we can see that over the period from 2007 to 2019, REITs or REORGs in Greater China exhibited superior performance. So we can see they have a higher monthly average returns compared to the European and US REITs. The offshore real estate operating company had an average monthly return 1.5%, Hong Kong REIT 1.2%, Taiwan REIT 0.67%. And the Schack ratio is also much higher than the European and US REITs. And Hong Kong REITs also have a significant positive alpha. So the alpha in capital asset pricing model measures the unpredictable part of the REIT's returns that cannot be explained by general equity market returns. So this means Hong Kong REITs significantly outperform general equities over the period from 2007 to 2019. Besides, Hong Kong and Taiwan REITs also provide diversification benefits. They have a lower correlation coefficient with the equity market compared with the European and US REITs. And the beta is also lower. Yeah, because in Japan, the beta shows the sensitivity to risk in the equity market. So Hong Kong and Taiwan REITs bear less systematic risk than US and European REITs. So the superior performance of Hong Kong and Taiwan REITs was even more obvious during the global financial crisis, because the FTSE Nareit C-REIT or the Chinese REIT index started only from 2009. I didn't calculate the performance during the financial crisis, but here we can see the performance by Hong Kong and Taiwan REIT and the European and US REITs during the financial crisis. So first, even during the global financial crisis, Hong Kong and Taiwan REITs remained a positive average monthly return, while US and European REITs had negative returns. The yield of Hong Kong and Taiwan REITs was also higher than European and US REITs. And Hong Kong and Taiwan REITs also provide diversification benefit. Yeah, so the correlation coefficient with the equity market index was much lower than the European and US REITs. And the beta also decreased during the global financial crisis or become less significant. So although REITs are listed on stock exchange, the majority of their income comes from the underlying real estate assets. because real estate properties are fixed in location and real estate market is less liquid than stock market. So REITs tend to be less vulnerable to any international contagion effect than other stocks. So then let's take a look at opportunities and obstacles of C-REIT. The opportunities is huge because the huge market potential in China. So the total stock of commercial real estate in mainland China is enormous. As mentioned by the GSUM fund management, the total market value of China's commercial real estate has reached over $40 trillion in 2018. The value of the investable asset was about 20 trillion, and the value of the asset that can be securitized is about 1 trillion, and the value of the assets that have already been securitized is about 200 billion. So the potential of China's real estate securitization market is huge. So this graph shows the market size of the US, Europe, and Japanese and Singapore and Hong Kong REIT market in 2019. So we compare their market size with China's potential market size. Basically, we can see that the potential market size in China will be close to the US and is around 3 times the size of the European REIT market and over 4 times that of Japanese market. So we say the emergence of REITs provide investors great opportunities to invest in Chinese real estate market. The introduction of REITs could inject much needed liquidity and capital. Through the securitizations of shares in the properties are converted to cash so as to ease financial pressure for real estate developers. And at the same time, they can retain control for the developed property. So REITs are also used by the government to divest their assets. For example, in Hong Kong, REITs have provided a divestment of publicly owned assets that allows the government to contain its fiscal deficit. The same for the infrastructure REITs in mainland China. Theoretically, REIT could provide a good exit for the private investors of the PPP project. So the China's infrastructure REIT market also has huge potential. Given the size of China's infrastructure market, even just 1% of such asset was securitized and structured as trusts that would imply the market of 1 to 1.5 billion RMB. So the US is the largest infrastructure REIT market. However, China has the potential to catch up. So based on the estimations of S&P, so the Chinese infrastructure REIT could scale up to 300 to 700 billion US dollars over the next 10 years. So we see there are great opportunities, but also heavy obstacles. The main obstacle is the lack of clear legal status for REITs. Therefore, removing the legislative obstacles is the first step the government needs to take towards establishing a modern REIT regime. So for example, the mutual fund can be allowed to invest in, for example, onshore pre-REITs. So taxation is a more complicated obstacle because there are central tax system, local tax system in place. A waiver of taxes related to asset transfer is required to develop REIT regime because this is one of the biggest concerns from landlords to build a REIT plan for. So the other tax breaks for the income tax, so could also be considered. So I would say taxation is actually a factor that determines the market size of China REITs. Other areas that China needs to fine-tune include, for example, unified product structure or a standardized valuation method or a transparent credit rating system, and etc. So overall, the opportunities for future development of the REIT market in mainland China are significant. So since the beginning of the 21st century, the real estate industry has been the most important sector in China. So with the development of asset securitization, the huge potential of real estate market will no doubt attract investors to join this market. Okay, that's all. Thank you very much.